What's going on, everybody? It's your boy C-Zar with C-Zar Gets Crypto. We're going to look at the Bitcoin chart and a bunch of other charts today. I want to talk about the Fibonacci tool, how I use it, how you can use it, and just what I've learned personally about it and what how to use it. So if you click here, it might be a pitchfork, it might be something else, I don't know, but you click here, make it your fib retracement tool. This is a standard tool. Your tool will not look like this, but you would draw from, normally this is how I do it. I draw from top to bottom. And before we do that, why not measure this fib here? We'll go from top to bottom here, just because we're doing examples. We're not actually doing price analysis. It is price analysis, but it's not anything like, we're not really caring about it. We're just going to observe the facts and see if I can show you how I use the fib. Your fib tool will not look like this. If you want to customize it, just go in, click. You can put all your own little numbers in here. You don't have to activate all of them, but I do, I've got all these little guys activated. Your background might be on it. It might look something like this. I like to bring my background down to where there is no highlighted areas. I did put mine based on the logarithmic scale because I am on the log scale here. And yeah, you can choose your own colors. I know that the lines that I have are not going to be the same colored lines that you have. But enough of that. Let's get into the meat and potatoes of it. So you measure from your top to your bottom. This is a very classic way. This is the way, in my opinion, to just measure a fib. You don't want to do somewhat of a top to somewhat of a bottom. Some people do that, and if you want to, what I would say is either find a line that's more agreed upon than the absolute bottom and the absolute top, or maybe use the closing candle basis to do that, your absolute high candle and your absolute low closing candle. And you can see here, we've got some respect on the 886. There's a little bit of respect here on the 382 showing a bounce. This fib doesn't look too respected in my opinion, and that's not how I draw it, but you can draw them a bunch of different ways. The main point is you want to try to get something that fits best, and to me this already does look better. You're bouncing right off the 0.69 area here. That's not a fib, that's just a level that I've identified and made significant. You've got the 0.236 here that we're bouncing off of. We bounced off the 0.069. Again, that's not a fib. The 0.069 and the 0.69 are not fibs. Everything else on here is. Technically the 0.5 isn't, but that is a ratio that you should add into your retracement tool. So what I look for, first and foremost, I draw from top to bottom, and what I look for is respect. Got a little bit of respect here. To be fair, I don't like this fib, so if I don't see respect, I might move it to the next high, which would be right here. And here, to me, this does look like a little bit more respect, actually. The lines are kept a little bit tighter. You've got closing candles and opening candles right at the 618, bounces right at the 618 here. This to me looks a lot cleaner. And we even got respect down here on this line, which is kind of nice to see. This price action is not to be considered, but let's go further down the line. Using this top here, the most recent top to the most low here. We've got respect on the 618, respect on the 382, respect on the 236. This to me is a good fib to use for sure. Versus something like if we had it here, I mean, it's arguable. This is respectful, but to me, it doesn't look as good. I don't know. This one could be a good fib to use too, but it wouldn't make sense to draw from a closing high to a wick low. That wouldn't make sense. You'd probably go to a closing low, and this one does show a little bit of respect too. And that's the difference. These fibs can be drawn a bunch of different ways. It doesn't have to be precise, but you do want to see some respect off it. That's how you know that you're going to get a more precise answer. Like right now, let's say Bitcoin was to go bullish, right? And we were to go up here. The target areas are between 30,500 and 31,750. I'm rounding, but that's where the target areas are. Price could wick all the way up to the 886 and then come back down and close. That's still showing respect at this line. It could not get quite that high up to the 1272. What that gets right up there, but it doesn't reject, or gets right up there to the 1618, doesn't quite get there, but it rejects. That's telling us that people are watching these areas and they're front running them. They're selling them before it gets the selling pressure is too high for price to even get above there, and that does happen too. And I still, even if it doesn't touch this line, I still would consider that a 1618 rejection if it got somewhere near the line, or a 1272 rejection. And the reason I'm going over all this is because, if you want to learn how to use them yourself, this is important to know. if we go back on a weekly basis, because you don't want to think that you found a fib that's good, and then just because it doesn't match things precisely that that you're using it wrong. It's like don't expect it to be a crystal ball that tells you exactly where the price is going. It's an idea. It's a lot of lines that have some ideas on them. And when you see, this one right here, I think I drew this in my other video too. This one, it kind of looks good. A little bit of respect on the 236. It almost has some respect on the 382 here, but both these lines I'd say are pretty disrespected. You go up and down them here. I don't really like it. And then that's when, if you see something like that, the next thing to do would be to move it to the next obvious high. Not this high. This is a little bit of a higher high here, sure. But this high to me is the one. This high was in the middle of a downtrend, where this high was at the end of another little consolidation uptrend here. And we can see already that we've got a lot more respect on this line. You want to look for price, what it does after the anchor point, not before. Having it agree before, that's kind of nice, that is encouraging, but that's not necessary. You don't really need to worry about that. What you want to do is after the anchor point. And you can see here, when above the 236, found resistance at the 382, support on the 236, came up to the 618. Now we're finding support, it looks like, on the 0.5, which isn't conventional. You don't normally see support or resistance on the 0.5. But whenever you do that, that's normally, that's a good thing. I always say that respecting the 0.5, when you get significance on the 0.5, you see significant moves. I don't mean stuff like this. Like, yes, in my opinion, it looks like we're finding some kind of support on this 0.5 area. But that's not what I mean by finding like a lot of significance. And it is significant. Whenever I say finding significance on the 0.5, if you've ever heard me say that, I mean if we come up and it rejects immediately, that is significant. Because that immediate rejection always, with a 0.5, it always leads to a strong move down. Or up, if we were coming down from the upside and we bounced off this area and then we went up higher, like rejecting it once, but hugging it like this, that doesn't take away the fact that it's significant. It definitely is significant, but all I would say that this means, that the 0.5 means right now, hugging it like this, is it just means that it wants to, stair step higher, come back down, stair step higher. It's not going to like lead to a super mega significant move. And I don't personally expect Bitcoin to go higher, but being fair, looking at the fibs and knowing what I know about fibs, this is kind of a nice structure. You want to see your fibs, you want to see your price respect the fib on the way up. You want to see it come up, rest on the line, come up, come back and test the line, come up. You want this like stair-stepping formation to continue, because that means that as you get going higher, you can expect, okay, maybe a bounce there. Maybe I come back down to the 886 and then it's off, to higher prices. It gives you a kind of idea. And yeah, that kind of looks nice. But I don't know, maybe that's what Bitcoin does, maybe that's not what it does. I am bearish personally, so I'm not expecting that. But anyways, we're not here to talk about that. We're here to talk about fibs. Let's go into bigger time frames, and we'll switch charts here in a second, but I want to go on the monthly time frame here and look at the last bear market. So from top to bottom, this is a very, very significant fib. It's fibs like this, the ones that we were just looking at, they have significance to them, but the most significant fibs are going to be on the largest time frames. And that's why sometimes if you're in a smaller time frame and you can't seem to make heads or tails out of these fibs, zoom out, go, if you're on a minute or an hourly time frame, zoom out to a daily, zoom out to a weekly. It's a lot less confusing whenever you see things. And you can see, without me even explaining, I hope you can see the significance and the respect that's being had with all these levels. From top to bottom here, we just zoomed all the way through, all the way up to the 786. That is a deep retracement. Generally, when you hit a deep retracement, you get good continuation afterwards. Disrespecting the 618, not even acting like resistance, and this is a monthly time frame. If we go to a daily, let's see, from the bottom to the low, we did just blow right through it. We found support on it, which is nice, but I guess that wasn't a good example. We could have found resistance on it on a daily time frame, is all I'm saying. Keep in mind that sometimes to see what you're looking for, know what you're looking for, you do have to look at it for multiple time frames. But here you can see it went all the way up to the 786. I would call that a 786 rejection perfectly, even though, yes, it had a little nipple just above that line, just a little one. I would still call that a perfect rejection. You got a double top here, came lower, and yes, you did wick down here, but if we're really looking at what price did, this was during the COVID, this is whenever, businesses, we had the COVID shutdown, the whole shutdown of the United States because of COVID. So that's what this wick was. Some people might argue that price action was put in beforehand, but I do think that we had some panic selling going on because of COVID, and I do think that we were supposed to go lower, but I think most of this came from the COVID crash. Regardless of what you think, I wouldn't look at this as support off the 236 or support off the 0.069. I would look at this as a freak out, a panic sell, and really what we did was we held this 382 as support. And we can look here, this is what I mean by sometimes if you look before the anchor, you can kind of know when a line's going to be significant. You can see all the support that was held here. Yes, we wicked below this line over here. This line wasn't even in play yet, but yes, we wicked below it. But we held it. We held it on a candle body basis, and then when we finally broke it, that's when we had the big dump. And we broke it here. This should have signaled to everybody in Bitcoin that we're not done. We're going. We broke it. This line was so significant, and we just cut through it like butter. Of course, we're going to have a deep retracement like the 786. Came back down and held it. We held this critical line again, and then the 618 was a little bit more of a resistance level until we broke out of it. Tested it as support, and this is key. This is a beautiful thing, and you'll see this all the time, especially with the 618. Breaking above the 618, coming back down, and you want to see this with any fib, but with the 618 specifically, breaking above it, testing it as support on the dot like that, no wonder we just rocket to the moon afterwards, you know what I mean? And literally right to the 1618. Bounced off the 618, showed it respect, touched its brother up here at the 1618, and you closed right at it. Yes, you wicked above it, but you closed right at it. And if you sold at 62,000 instead of 69,000 at the actual high, I'm sure you would have been fine. And this is where you would gauge the situation you're in. You would think, okay, we've touched it before. We just bounced off the 1272. Is it possible that we do a double top here? I would think so. Is it possible we go even higher? I would think so. I think everybody thought so. And then when we had this close right at it, that should have indicated that hold up, this 1618 is being respected. Maybe we should draw back, And you could sell before it, you could sell after it, whatever. If you sold in this general area, you're doing good. Came back down, tested the 1272 as support. Came back up. We're disregarding the 1414, it looks like, and that's okay. Maybe we had another line of resistance here at like the 1.5 or something. Came down, found support on the 886. This is an 886. Again, this is all from this previous cycle's bull to bear top and low. And we're using this from years, from 2017 all the way until now up in 2023. This is totally valid. This fib is being respected. Even to this day, it's still being respected. And I think, in my opinion, whenever you see something like this, whether it's on a monthly, a weekly, an hourly, whatever time frame you want to choose, when you see a fib extension being respected like this off of a fib that was so very, very respected before, I would expect that a low like this is completely possible, but I would expect that if we can't get above this 1272, and to me it looks like we're front running it. It looks like we're front running it right now. We couldn't even get to it. There's so much selling pressure. But if we can't at least get above this 1272, to me that would indicate that we're at least going back to the 786, if not lower. And maybe we wick. Just because we're going to the 786 doesn't mean that we can hold the 786 and we could still go down here as low as 10,000, or we could go as low as 9,800. Look at how low from here we held the line at 6,326. We held the 382, but we went all the way down as low as $4,000. Like literally from a close to a low, we went 40% away from this line, and we still held that line perfectly. I would still call that a perfect hold. You know what I mean? So. And ideally, you wouldn't want a big wick off of that, but things can happen, especially in times of bottoms, dramatic bottoms. And it wouldn't surprise me. It wouldn't surprise me that if we held this line that within that month we saw a crazy wick like this. We got where we came all the way down to the 618, right below $10,000, and then spiked up. Maybe we come all the way down to the 0.5, right around $7,800. I honestly wouldn't be surprised if ultimately price reached a range of 11,000 to 7,800, somewhere in there. And I know that's a big range, but it wouldn't surprise me. It would surprise me if we got a candle that closed on a monthly basis below this 618. That would surprise me. Even a candle that closes below this, we're getting there, but it would surprise me if we closed below the 618. I don't think we will. We held the 1618 as support or as resistance. It wouldn't be out of the question to hold the 618 as support. And then this is something you can do with fibs too. You can leave your fib here from a previous time frame, and you can take from bottom to low another fib. And this is where things look a little bit messy, but you kind of adapt your eyes to it. You can see like, okay, this is where these lines start, this is where this line starts. I can see that there's two lines here, and you can see actually we got front ran, right? If we took this away, I was saying that there's so much selling pressure at this 1272, but if we look, we draw this fib from bottom to top. The reason I'm drawing it from bottom to top is I want the extension. I want the extension levels, which, by the way, bottom to top here, we checked the 618 before going lower. We literally checked it just like we checked the 618 here before going higher. From this 618 check all the way up, we went to the 1618. From this 618 check all the way down, we went to the 1618, and we found support there, which again is the same area as this 0.886. And this is where using two fibs can be helpful, and it really can be helpful, because you look for areas of confluence. And then this 886 right here, which is a closer top in my opinion, just like we bottomed off this 886. It's crazy. These fibs are like mirroring each other. This is a smaller fib for sure, but they're very much mirroring each other, which is kind of cool. And you expect to see that because psychology, this is all based off of psychology, and not just psychology, but algorithms too, bots, stuff like that. And I'm sorry. Let me get this going here. Just make sure. Let me see here. Can you guys see me? Okay, good. And what I mean by psychology and like bot trading, they generate their own patterns. We generate our own patterns with where we think and where we want the market's going to go. We develop like a personality within ourselves, within price, and it happens at a subconscious level. And here's what I mean. I'll give you an example of how fibs determine psychology before we look at the mess again. Imagine you're holding an asset, and everybody's going to have a different answer. Everyone's going to have a different perspective on this, okay? But we all have, let's say we have $1,000. Maybe that's a lot of money. Maybe that's not a lot of money. But that is a lot of money. In my opinion, it's a lot of money, and I think anybody would not want to just give $1,000 away. So no matter how rich you are, no matter how broke you are, of course. And $1,000. You have $1,000, okay? You put it in whatever. You don't know what you're doing. You're just starting to invest. You put it in whatever. And that $1,000 now is $500. Some of you might be like, my question is, would you get out? Would you cut your losses at $500 of a loss? Or would you stay in and say, you know what, I already lost $500. I'm in it for the long haul now. Some of you would say, I'm going to cut my losses. This sucks. I'm out. Some of you would say that. Most people, and the majority, I mean it, over half the people, I think it's higher than that. I think it's like 70% of people would stay in. They'd be like, well, shit, I lost half of it already. I might as well, I'm in it now. I might as well buckle up. Some people might not, and you guys are lower risk takers, and there's nothing wrong with that. That could be smarter in certain situations. That could prevent you from some serious gains in other situations. If you never gamble, you're never going to lose, and that's kind of the mentality of these lower risk takers. I'm a higher risk taker person myself. What I'm trying to get at is these people who would keep their money in the stock or in the asset at a 50% loss. What happens whenever that 50% loss goes to a 61.8% loss? The golden ratio of the universe, golden ratio of literally everything, at least in this universe. Whenever people go from losing 50% to 61.8%, around there, then there's a shift that happens. The average person, most people, there's only going to be some people who are like, man, I'm in it now. I'm just watching it go down, and I'm one of those people. If I'm in it, I'm in it, man. But most people by now, whenever they've lost, instead of $500, they've lost $618. Now they're starting to think, man, I should just sell. I should get out of this. It's, I don't know what I was thinking. I'm going to lick my wounds and go. And that's why you generally see these pops, these little like areas of support and resistance around the 618 that are very key, because those are areas where people are literally in a last-ditch effort panic selling, or are in a last-ditch effort panic buying, and that's where you see these key points of turnaround. And that's just kind of what I want to talk about whenever I'm saying psychology. Like, there is psychology that's involved. Most people would keep their money in at 50% of a loss. The average person would. And whether you know it or not about yourself, I promise you, if you saw your 1,000 go from a $500 loss to a $618 loss, now the buckle up, I'm in it for the long haul, that your brain starts to change. The average person would actually be like, oh man, I'm going to take my 400 or my 300 and whatever dollars and get out, lick my wounds. And that's sometimes that's smart too. Sometimes you got to know whenever to pull out. But if you're in it, sometimes it's good to just know you're in it. Sometimes you don't want to sell for a loss. Everybody has different strategies. I'm not trying to talk strategy so much. I guess I am, but I'm more trying to talk why psychology is definitely a thing that plays into these patterns. And the algorithms, the computer algorithms, they play off of these levels because they know that, or the programmers that design them know that human psychology is based off of these numbers. And not just psychology, but structures, buildings, patterns that we see in nature. The Greeks and the Romans used it to build their tremendous structures. I don't know, the golden rectangle, the golden squares in a lot of I think it's the Greeks that used it. Anyways, enough of all that stuff. I don't know how educated or uneducated I sound there, but what I'm trying to say is that these lines aren't just made up. They're not just made up. They exist for a reason. And as we develop a personality within these lines, it kind of helps us determine what we could see as a potential, like more potential significant lines. Okay, we didn't respect the 1414 over here. I wouldn't expect, personally, that when we come up again to be looking for respect on it. It makes sense. We bounce off the 1272 here. It makes sense that we're finding it as resistance zone, The 1618 was a significant level to top. If and when we blow through it, that might mean, we're really due for some higher price action. If we find resistance on it again, that's not going to be a good thing. It's a significant area to watch, And with or without your knowledge of this, the algorithms, the computers, people who use this stuff to trade, they're monitoring this stuff, and that's why I use it personally. So the fact that we rejected the 618, and whenever you see this, just like you want to see stair steps going up, which we definitely have, Bitcoin, we went up here to the 786, came down to the 382. That's beautiful, man. That really is beautiful. Holding the 382 as support is a beautiful thing. Checking back up here, you even checked the 618 and then went off to the races. And then you tested the 1272. To me, whenever you go from the 1618 and you hold the 1272 as support, like, it's more common that this 1618 would no longer be in existence, and you would at least go to the 1886. Like, Bitcoin was definitely making a lot of people think it was going to be worth $100,000 here, if not even higher. Like, truthfully, whenever you break the 1618, I look to go to the 2272 or the 2618, or even the 3618. And yes, it doesn't stop there; it can go higher. I'll show you what I mean. Let's see. I wonder if this one has it. Let's see. Maybe not. I don't know. But, we topped off here at the 2886, 1786. We had a bottom right around there. This one, I don't like it as much. There was one, maybe it's in the non-logarithmic scale. And it goes, let me see, something like this. And you can use them in the non-log as well, as long as you have that all accounted for. Maybe not. I don't know. I don't know. I swear there was one. There was a fib that was showing a 2618 respect on Bitcoin's top, on this top here, but I don't know. I've seen it before. I don't know. Maybe it was down here on this one. Yeah, I don't know. Let me see if I can take it off a log, if that'll do it. Yeah, I don't know. I honestly don't know. But the main point I was trying to show is that you can have fibs there. Yeah, that's kind of a 20.618 top. It's close enough, you know. I don't know. You can have fibs that respect these higher extensions. It can go all the way up, you know. It's not as common. I don't put my money on that stuff. That's why I don't normally look at it, but you know, it doesn't have to stop at the 1618 or the 2618 for that matter. I do want to put the original fib that I had back on and go over this. So yeah, you're seeing this general stair step up, but now that we're in a bear market, it's good to look for stair steps down, and we kind of are having that right now. You know, we went down, tested the 1272, came up, broke through it, hit the oops, my mouse is kind of janky. Hit the 886, came back up to the 1272. I would personally expect at least the 786 to hit, if not down to the 618. And to me, it would make sense that the 618 is going to be in play because we rejected the 1618. If we rejected the 1886, I would look more at the 886 as being the bottom. And the 886 could be the bottom still, but you know, we'll know when we get there. And to me, this is a rejection. I would count this as a front-running rejection of the 1272. It's a rejection of another 886 level right here. Like literally, this little fib is like the inverse of this big fib over here. And if we look at the 1886 down here, it's right at the 786. I would expect it's literally right there. I would expect us at least, if we were to have like the minimum bottom for this bear market, I think it would be around here. Around 13,300, around 13,200. I am thinking lower. The 2272 down here is actually right next to the 618. Let's see if we've got, you know, 2272. I wonder if we got another one of those. So top to bottom here, we measure. I mean, damn. Wow. This top is right at the 2272. And this is off a smaller fib. This is off the extension. But, you know, if we're measuring here off of this smaller fib and we're looking for the extension, the bottom, this 2272, man, wow. This fib so far has been like very inverse from like the stuff that we've seen down here. So I don't know. I'm not saying that it has to go there just because that line's there, but it lines up with the 618. We did have a top on this 2272. I'll delete this one to show it more. You know, right there. And we're rejecting the 1618 right now. This is kind of cool. You know, you can draw all kind of fibs, man. The first fib I had was from this top to this bottom here, but then I took this top to this bottom because this is kind of the move that sent us up to new all-time highs. You know what I mean? So, and they're both respected. You can use them both. I think there's nothing wrong with using them both. But having them both on there does generate more noise. But you look for areas of confluence, you know, and there's not a whole lot of confluence. I mean, you do close at the 618, but you tip the 2272. Personally, seeing a tip is more significant to me. You know, just the way this one looks, the 1618 rejecting, I would look, if I was a bull, to find support. This to me looks like we would at least come back to the 1272. And the 618 down here is at 8,000 something. And, you know, we could be playing off of this fib as well. I think that's why it's good sometimes to just, like, jump around and look. We've got this fib, right, that we were drawing, bouncing off the 886. If we were to draw another fib here, low to high, you know, you got your 1272 right there at the 1886. The 2272 is right in between the 1618 and the 1786 is, like, basically right on it. So, you know, there's some areas of confluence here. I don't really like this fib as much. Though, to be fair, we are respecting right now the 236 and potentially rejecting the 0.069. So, you know, we could, and we got to bounce off the 618, but this was before the anchor was drawn. So, you know, it's not really anything yet. It wouldn't surprise me if we found support down here around where we bounced before. But that's enough for Bitcoin. Let's look at the Nas. Let's look at Nasdaq. Nasdaq 100. And if we go from the top to the bottom here on the monthly scale, we can see. Do I have it? Did I switch it back? Yes, I did. Okay, good. We're basically bouncing off the 0.69, which again isn't a fib. It's just an area that I've identified as something that seems to be respected. I don't see a whole lot of respect off of this, to be completely fair. I wonder if we get this one here. You know, the Nasdaq could go higher. It could be topping off right around here. It's completely possible, but to me, I don't really have a whole lot to say about this. Maybe if we were to go on a weekly time frame, this is where, you know, getting closer, trying to get closer, shorter time frames is probably essential. You know, I would definitely expect the Nasdaq to go higher, maybe up to 14,783, because that's the 1272 at least. Maybe it tips it and then turns right around. Maybe it goes just a little bit above it. But you got this support that was once resistance off the 886. I think this thing wants to go higher. You had a little check at the 618 here. You broke it. Yeah, I don't know. I think it does want to go higher. If we're to look on a monthly scale still and go back, let's see if we can find a fib that this thing is actually looking more like it respects. Bottom to top here. Bounced off the 0.5. That is, you know, when you find significance, and this to me looks like a significant move, you do get significant moves off of the 0.5. The 0.5 is not something that's normally respected, but whenever it is, respect it because it generates very significant moves. Maybe we go up as high as this, you know, 15. Maybe we touch back at the 0.069. Maybe it goes on to new highs. I don't know. I wouldn't really expect that, but a lot can happen. You know, let's look at the SPY. I'm not seeing too much on here as far as fibs go. Let's see. From a low to a high. Bounced off the 382. That's very classic, especially in the stock world. That's actually a very classic thing. Let's see. You know, like if we took this bottom here and went to this top here, I guess it's not a bounce off the 382. I don't know, maybe this one would be. Holding the 236, whatever, you know. That's kind of nice. I wonder, maybe we've got an inverse here. Came back through. Doesn't seem to be respecting this one too much. Topped at the 2272. No respect on the 1618. No respect on the 1272. You know. This one, fibs for me on the SPY, I wouldn't be using it a whole lot. Maybe it's on smaller time frames. Let's see. Let's go to like really ridiculously small time frames, like I guess ridiculous. Let's go to 5 minutes. Because I know a lot of day traders use smaller time frames on the SPY, and it can be small, it can be big. Fibs work on all kinds of things. If you're not finding it on larger time frames or smaller time frames, try switching it around. And yeah, right here, this is perfect. This is actually really nice. You got support on the 618, a little fake out here, this bullish move to confirm it. Bounced right off the 1618, finding rejection on the 1414. It looks like it wants to come down, at least on a 5 minute time frame, which isn't like too significant. You know, definitely already a lot more respect on these lower time frames. So this is probably where like day traders, bots, algorithms, they're more involved, you know what I mean? Where the general like attitude of the world kind of directs the long term, I guess. Let's see, down, up. Yeah, there's some respect for sure on the lower terms. So that's where it is. That's probably where it is. Anyways, I don't know. NIU, we can look at NIU. I do like NIU. And not all charts respect fibs. You know, some really don't. Some respect certain levels more than others. The 618 is generally something that's respected across most fibs. We got a bounce off the 236 here. Rejected the 0.5. This rejection off the 0.5 I actually really don't like, to be fair, on NIU. I don't like that. It does look like a rejection off the 0.5. But if we can hold this 236, which it looks like we're doing, then that would be good. And that would be indicative to me that we're probably going to go above $7 here soon. But keeping an eye on that. Let's see. week. Let's look at this. So I remember I measured from the top to bottom here, and I didn't really like how this fib looked. It doesn't seem to be showing any respect. But if I draw all the way down to this high here, where this is kind of our like last little pop up before we had our final descent. This high was the high that sent us down to the current low. So that's my logic behind it. And I do like this fib a little bit more. We bounce off the 0.069. We found resistance at the 618. We're finding support at the 236. Struggling to get above the 382. I do like this one a lot. If this one is holding resistance as like a downtrending fib, then what you would do is you would measure from here, top to bottom, get these extensions going. You would be looking, if you were thinking that price is going to go lower, you'd be looking at the 1272 or 1618 here. And that's kind of the main point. I feel like I just keep saying over and over again is you're looking for these like stair-stepping formations. You're looking for the fibs to be respected. That's the main thing with all this. You want to see price doing stuff like this. And if it's not being respected, move it around. Don't just move it anywhere. Don't just like magically place the lines where it makes sense and then you've got a top that literally doesn't exist. Like don't do that. Put it somewhere that makes sense. Make it make sense and don't just cherry pick. Because if it makes sense, it's probably being respected for a reason. There's probably people with eyes on this exact same thing that are paying attention to it just as much as you are. So, and maybe not. Maybe it's a coincidence. Who knows? Who knows why price acts the way it does? Everyone has their own theories, but you look for these little stair-step formations. Rejecting the 618 is not condemning. And in fact, there's some rules that kind of go in line with this. I'm gonna end the video with some rules. I hate that it's at the end. I feel like I might have lost a lot of people with all the rambling. But if you stayed, you're getting the good stuff. Okay, so with the way that the fib reacts to any of these, like out of all the lines, the most important are the 236, the 382, and the 618. If you see respect on the 0.5, respect it for sure. But I'm not going to talk about that one. The 382, the 236, and the 618 are the most common. And what you want to see is you want to hold support. You got to hold support at the 236 if you want to go up higher. If you want to go lower, you got to break the 236. You know what I mean? And what's really nice, always, in my opinion, is holding the 382. The only thing nicer than that would be holding the 618 as support. You know what I mean? Holding these as support are very indicative, almost always indicative, that you're going to go to deeper retracements, if not extensions. And then to look at extensions, the way that extensions, to like how to expect extensions, because you can draw a fib anywhere and be like, oh, I could expect these extensions. Don't think of it like that. The way that you would expect extensions is how price interacts with the 618. And to be fair, when you see the 618 being respected, what you should do from a statistical standpoint, how you should look at it, is you should not be expecting extensions. You shouldn't be. It doesn't mean that they're off the table or that it's not something to pay attention to. But if you're finding significance on the 618 from a resistance standpoint, what you should first be looking at, what you should be more considering, is these deeper retracements, not extensions, but retracements at the 786 and the 886. These, to me, it's basically like this. If we broke through the 618 like butter, instead of holding it as resistance once, twice, 3 times, 4 times, 5 times, instead of holding it as resistance so many times, if we broke above it and held it as support, broke through it on the first pass, came back and touched it, I would have no doubt in my mind that we're going to the 1272 or the 1618. But because, and this is what I mean, these are rules, because we held the 618 as resistance, we confirmed it as resistance. It doesn't mean that the up move is over. It doesn't mean that at all. It's not a condemning thing. It could, but it's not a condemning thing. And in fact, the fact that we held it and we tested it like literally 5 times over weekly periods, we tested it so much, that's a good thing, because that means that the odds of us breaking this line when we come back up to it are good. But it's also a bad thing in the terms of you're not going to be looking for these extensions. You're going to be looking for retracements. And it could still go to these extensions. It's not condemning it. It's the likelihood of it is less so. If you want these extensions, what you don't want is to find resistance on the 618. You want to find support, or you just want to disregard it altogether. I'll show you what I mean. And again, so what I'm saying here is, to me, looking at this fib, being fair with myself, I don't deny that these extensions could be in play, but very realistically, I would expect price to go anywhere from like 720 to 826 before I look at these extensions. I want to see how it interacts with those. If it can get above the 618, come up here, come back down and hold the 618 as support, then yes, I'd be convinced that we're going to see extensions. If it can get above the 618, blow through the 886 or 786, if we blew through this 886 at 826, then yes, I'd have no doubt believing that we're going to see prices above $13, above $15 even, maybe even above $20. But until then, this is where my eyes are. My eyes aren't up here. With the way that it's interacted with the 618, my eyes are not up there. They're over here. Where if we're looking at Bitcoin, if you don't remember from earlier, I don't know why I have that on there. Let's see. You know, we've got this right here. We found this 618 as resistance, you know, a lot, whatever. This 382 was support. We came through, we blasted up, and we literally broke that 618 like butter. We broke through this 382 like butter. You know what I mean? We broke through the 236 like butter too. We didn't hold any of them as resistance. We held them as support. And then, you know, then we held the 618 as resistance, sure. We came back, tested it as support, blasted right through the 786 and the 886. The fact that we blasted through it on the first time is enough to convince me that we're going to see extensions at some point. But whenever we came back, tested it as support, blasted through the 886 like this, of course we're going to get extensions. And it makes sense that it would turn around right around the 1618. And, you know, breaking through the 1618 is bullish, but these aren't really, there's no volume coming in. There's not a whole lot. They're not big moves. And there was bearish divergence forming on the daily time frame, I know, on the 4-hour time frame too. But, you know, it just wasn't healthy conditions in the market. I feel like this would have been a good time to sell. Whenever you've tested the 618, the 1618 a bunch like this, and you're barely getting above it, it took you a big move just to get up there, I would have been hesitant personally to buy there. And I remember telling people, I'm like, I don't think it's a good time to buy. You know, maybe it's wrong. I'm in crypto. I hope that things go up more, but, you know, I wasn't telling people to buy here, and for good reason. But that's the point I'm trying to say too, is looking at the relationship to the 618 is very helpful when determining if you're looking for extensions or just deep retracements. And the rules, basically, if I was to put it in short, are as follows. If you break through it on the first attempt, if you break through the 618 on the first attempt with ease and conviction, okay, it's not just a wick through and then you close below it. I'm talking about a closing candle, a clean break, a clear break. If you can do that on the first try, you are definitely going to see extensions. You're almost guaranteed to see extensions. You know, with the exception of random things happening, you know, it could be bad things. But if you break the 618 on the first try, I would bet a lot that you're going to see extensions. If you don't break it on the first try, that doesn't mean that you're not seeing extensions. It just means that you're less likely than definitely, you know, you're less likely to see them. You could still even be likely to see them. You're just less likely to see them than if you just broke it. If and when you do break the 618, finding support on it is a very good thing. It's a very good thing. That ups your chances for getting extensions as well in the Fibonacci. If you find resistance on the 618 and, you know, it's maybe been 2 or 3 passes and you found it and you're coming up for your 4th pass, I would bet a lot that you're going to break the 618 for sure on that pass. The 3rd pass or the 4th pass, if you've been messing with it and it's taken you a little bit but you're still coming back up to that area, you will definitely break it as passes go on, you know. Generally, you'd like to break it on the 1st or 2nd pass, but more passes does not diminish the ability to see an extension either. It doesn't diminish it, really. It's just really the only thing that's helpful is if it breaks the first time, then you're like definitely going there. If not, it's not condemning one way or another. Just because you break the 618 does not mean that you're going to see extensions. If it is the 4th pass and you find support on the 618, that does give good hopes that you'd see extensions, but you could go just as far as the 886 or the 786, very deep retracements, but sometimes you get the most powerful moves off of those deep retracements. So, you know, it's just stuff to pay attention to. And before you even look at those, what you want to see is respect on the 382. You want to see respect on the 236 as support. That's what you want to see. And we didn't have to come this low. You know, coming back and checking, the fact that we came back and checked this 382, it doesn't surprise. Like, man, we broke this 618 with a good looking candle. I personally would have been totally thrown off by this dump. But COVID was going on, you know, things were uncertain. You know, maybe it should have been more obvious. There was you know, there wasn't any bearish divergence on the weekly. Let's see about the daily. Maybe there was. Let's see. There was bearish divergence on the daily. I know it looks really small, but at least I'm assuming. Yeah, there was. There's bearish divergence on the daily, so that, you know, that could have been indicative. We came up here, rejected the 50. Of course, we had a nice bounce down. You know, there's other things besides the fibs that I use too, but this is, you know, this is more about the fibs, and this is just how I think about it. And if you're looking at something and it doesn't make sense, if you're looking at something and you're like, or maybe it does make sense, it makes all the sense in the world, and you're like, oh wow, we broke it, there's no way it could go down. Look at the other things. Look at your other indicators that can maybe counter that. Because if they do, you got to use your own judgment, you know. From this, bouncing off the 382 like that and coming back above the 618 with fibs alone, I would have said, man, it's extension time. We're going. It's time to go. But if you look at the daily RSI and you look at some other things, maybe even if we took a fib, a more recent fib from like here, you know, a different fib, I mean, breaking back, bouncing off the 0.5 and breaking above the 236, that is bullish, man. That is a generally, like, this kind of thing does not happen after readings like that. But let's see, maybe down here. Okay, rejecting the 618, you know, and yes, we had another rejection here, but this was before the anchor, so this is agreeing. You know, this is like a double top on the 618. Maybe we should have seen this as bearish, you know, at least in a relative term. I don't think we should have expected an extension, though we did get an extension off of it. But, you know, a lot of things can happen. You can be prepared. You can have all your rules. You can know the textbook, and things will still happen that are completely off book. And this was one of them. This was what they call a black swan event, you know. Went down to the 1886, kind of around there, and then bounced. But, you know, whenever we came through, we broke through that 618 on the first pass like it was nothing. Like it was nothing. We're on the weekly time frame. We're looking at a small fib, so let's go to the daily. Yeah. Oh yeah. Like nothing, man. This is what I mean. This is what I'm trying to tell you guys. With the 618, whenever you break through like nothing. And I guess, to be fair, on the daily, we did find a little bit of support. A little bit of support there, but we didn't get a bounce off of it. We lingered, and then we cut through it very, very hard. And on the weekly time frame, it looks way more obvious. This should have been obvious, and we blew right through the 886. It should have been obvious that price would at least go down here, which it did bounce. It held this 618 pretty well, but it went lower. People were panic selling. That's, you know, at the end of the day, it's not a crystal ball. It's not going to tell you exactly where things go. It's just a general area. If you bought at this 618 and you sold at, you know, whenever we broke this 618, you would have been fine. If you took this 618 here and sold it, let's see. If you sold right at that line, sure, it would have gone up a little bit higher, but you still did great. And you could have been in a good position to, even if you bought up here, you would have been buying dramatically lower, but you would have been in a great position to buy lower. Controversially, you know, as significant as this line was before, we came up, found support on it. That should have been a telltale sign that we're going up. Found support on the 1618 here, going up. You know, I feel like I've talked enough about fibs. I don't really know what else to say. I've just tried to go over and give examples. I hope I didn't ramble too much, but the main relationship with fibs that you want to see is you want to see respect on the lines. You want to look first at the 236 and the 382 always. You want to see how they're being interacted with. And then, of course, the 618. When you see price finding its way above the 236, finding support on it, and, you know, I guess this isn't really too respected. I think I remember saying this in the beginning of the video. I don't like this one. That's because it's from the top to the, yeah, I like this one more. When you see this kind of stuff, you know, This, just because we rejected the 618 does not mean that it can't go above it, you know. It does mean that our chances for an extension are lessened, at least in the immediate term. We would look more for like a deep retracement here at the 786, which is at 38,000, to the 886, which is at 42.2 thousand. It could go that high, but it also wouldn't be completely uncommon, like we were just saying, where you touch the 618, you find resistance, and then boom, dumpster fire. And really, to me, what would convince me that we are going to look for extensions to the downside, what would convince me that we're looking for the extensions are two lines. And let's see, maybe they line up. But from top to bottom here, these extensions, they do line up. Wow. Okay, so it's really just one line. If the 236 from this fib and the 618 from this fib, if we disrespect it, if we go below this 236, I think it's over already. But here, I'll delete this line so it's a little less, you know, if we go below that 236, it's over, in my opinion. Especially rejecting the 618, going below 236, I think it's over. Definitely going to see extensions off of this. If that happens, that line, by the way, is right around 20,300, 20,274. But if we can close, if we cut this line, this 618 here like butter, the odds of us going to $12,000 to $10,000, $12,800 to $10,000 are very likely, very, very likely. If we don't, if we find it as support, you know, we could still go that low, but there's hope, you know, we'd be in this little ping pong between these 618s maybe. But that's something to be, you know, aware of. After everything that I was just going over, like this, you know, these are the relationships that you look for with price and the fib retracement levels. I hope I wasn't too confusing. I hope I made some sense, maybe enlightened some people, educated some people on it. You know, maybe I am not making sense and you've got questions, write it in the comments. Let me know. Let me, you know, help me help you, help me be better at this, because I know I'm pretty confusing sometimes with the way I talk, and numbers and charts and lines do not help with that confusion, I'm sure. So yeah, that's just kind of my rough ramble on fibs. Anybody can draw them. You can literally draw them. And you can draw them wherever, man. You know, you don't have to be super precise. And oh, we found the .886. You know, here's the you know. But don't cherry pick. Don't cherry pick. That'll get you nowhere. You're gonna be using hindsight. You're never gonna be predicting things. And if you predict things accurately ever that way, it's gonna be lucky. It's gonna be very lucky. And right now, man, I really wouldn't be surprised. Let's look at, you know, this fib too. We haven't looked at this one yet. We are bouncing off the 236. It looks like if we come down below that we could, you know, the next target would be the 382 down here at 23.5. If we disregard that, we're going to look at the 618, and that $20,000 level is going to be really, really clutch. If we bounce off of it, that's not condemning, or that's not going to convince me that we're not going lower. If we bounce off of it, it's not going to convince me that we're going higher. If we blow through it, on the first pass especially, I would expect extensions no less than $13,000, potentially all the way down to $8,000. And as we've seen before with this wick, it can go even below that. It could go below that, but come back up and close, you know, somewhere around that makes sense. Because when you get at these areas, that are low or high, you get people who are panic selling, panic buying. You get some extreme ranges in price. And that means we're going to get away from these levels. These levels, again, are just an idea. It's not a crystal ball. It's not a prophecy saying that the price has to go here, it has to go there. You know, I do, before we end the video, I guess, I do kind of use it in a sense to predict certain things, like a crystal ball almost, right? We're looking at Dogecoin here on the monthly time frame because it's just easier that way. If you go from the first high to the all-time low, and you look at the extension, we went right up to the 1618. We went a little bit above it, but I guess what we could say is price went above the 1618. If we take the next high to the next low, we can look at it and say price went above the 1618. It went well above it to the 2272, but it definitely went above the 1618. And it found respect on it again. So that's 2 times in a row. Could we then, and actually, let me see. yeah, I guess we didn't find support on it or anything, but we found support on the 1414. Could we break this next cycle? Could we break the 1618? Again, we've done it twice before, and this is where it becomes more like kind of like a crystal ball that I'm rubbing. I'm like, ooh, tell me the future. But I would expect at least the 1272. We've broken through the 1618 every time. I don't think a 1272 is out of the question. And if Doge does go lower, and I'm actually starting to think, I've gotten relatively more bearish on Doge lately. I do think it has a chance of going to this all-time high before. If not just barely above it or just barely below it, somewhere around that range. Somewhere around 2 cents or below 2 cents is what I'm thinking for the low. If that happens, these extensions, you can see me move it, they only get taller as we go lower. So if we go this low, the 1618, wow, that's at one. If we were to go to the previous high, let's say, I'm going to put it at 2 cents because that's where I'm thinking. Like if it went to 2 cents, I'm going to start buying. 1618 could be at $6, and that is an achievable market cap in crypto. That would put Doge at less than 600 billion or maybe less than 700 billion. That is a lot. That's a lot of money, but it is achievable. It has happened already with 2 other cryptos. What's the third one going to be? If not that, at least we could see the 1272 being more likely, and that puts it at $2. I think it doesn't put things like this out of the question. Now I'm kind of rubbing the fibs like a crystal ball, using previous only 2 iterations to kind of identify what's possible. I don't think that we're going to go to the 2272. I don't think anything super spectacular like that's going to happen. If we measure from the top here to the bottom, we've even got respect on the 2618 here, the 1618. Maybe we go to the 3618 at almost $10. Maybe we do that. Maybe we don't. Maybe this 1886 is the bottom at 4 cents. Maybe we go to the 1618 here for the bottom. I don't know. We did bottom off of this. We had a little bottom off the 618, and then boom, from 618 to 1618. You see these kind of relationships. Yeah, I don't know. I don't know what to think of Doge. I'm just saying I use these fibs this way to kind of predict a general area that I could at least expect. And if we've broken the 1618 every other time, I have hopes. I definitely have hopes. I know it's possible that we could go this high. And it would put Doge at a multi-$100 billion market cap right there. But it's possible. It's completely possible. What's the next $1 trillion market cap going to be? What's the next $500 billion market cap going to be in crypto? It could be Doge. It really could be. There's a bunch of other cryptos it could be too. But I've got my money on Doge. Anyways, that's not what this video is about. It was all about fibs. I hope you took something away from it. I hope it was helpful, not too boring. Although this is kind of boring stuff, but as I held your hand through all that, I hope you learned something. And if not, if I was confusing, if I'm wrong, if you know fibs and maybe I was wrong on something, or fibs and there's something that I didn't include, please leave a comment. Please help me to help other people be helped. I want us to all learn and make money and not get wrecked and just become better at navigating through this whole ecosystem that is charting, that is technical analysis. And there's a bunch of different ways, man. There's all these tools. I just use one of them. It's not good to use all of them, but it is good to specialize in your areas. And this is a fib channel. It says fib channel, but I don't use the channel. I just use I use the channel. I don't use the fibs. The fibs would be the same kind of things that we see here with the 236, 382, 618.5. But I changed it. I changed the parameters to just match. And you can see here, there's other fibs if I put it on. But I went through. I manually put in 0.25, 0.5, 0.1, and I made it roster colored because that was I was more of a stoner in that time. But we look at this and we see. This whole channel, you've got respect on this green line. We got respect on the red line. Once we found a little bit of support on the heart line. Once we broke it, we came down, tested it as resistance. Now we're holding support at this quadrant here, this lower quadrant. You can use the channel too to identify certain things. And it says fib channel, but you don't even have to use it as it's meant to be used. There's spirals, there's wave counts, patterns, stuff like that. There's all kinds of things you can use. This is just one of many, and this is what I personally specialize in, and I hope I made sense of it, because if not, this was a long video for no reason. And if you liked this video, please leave a like, please subscribe for more content. I put new content out every day, and hopefully I just get better. Hopefully we all get better at this little thing that we call TA. and hopefully I get better at communicating it, because I know I ramble a lot, and I think just the more I do this, the more practice I'll have, and yeah, it's a learning experience. It's all a learning experience, and I just want to say, if my grandpa's listening, thank you, Grandpa. This microphone kicks ass. I really do like the quality. It sounds better. It sounds way better than just having my phone. And it doesn't pick up on, like, it picks up on me, but it doesn't pick up on random things down the hall. You know what I mean? So that's nice. Anyways, take care. Bye-bye for now. Adios.